we've thrown a war, 8.5% inflation, the Fed raising interest rates, all at crypto. We've thrown Chinese ban. We've thrown so much at it, and it didn't make a new low. Kind of usually that's a signal that the market kind of has found its bottom. And so now we're looking for, okay, what are the upside catalysts? The upside catalyst would be if economic growth starts slowing. We're likely to see then long duration assets, things that tend to outperform in low growth environments. And crypto tends to do very well in that kind of environment.
The past few days have not been very reassuring for cryptocurrency investors, especially with Bitcoin and other top cryptocurrencies falling to multi-week lows. But there might be some good news for investors, as it seems the bulls are again trying to recapture the market. Raoul Pal, the CEO and co-founder of Real Vision, certainly thinks so and states the same in one of his recent interviews. In his interview, the macro guru explains that if the crypto market was going to fall to new lows, it would have done so over the past few weeks. We saw the effect the invasion of Ukraine had on the market, then the increasing consumer price index, which is now at a 40-year high of 8.5%. Coupled with every other thing that has hit the crypto market this year and last, Powell states that the market has proven its mettle to survive even during the toughest environments. Powell also thinks this is a great environment for the crypto market to grow, possibly in new highs. He explains that we could soon begin to see sustained upward momentum in the market if economic growth slows. He adds that more investors will flock to crypto to avoid being hit by the slowing economic development if that happens. Before we get to Powell's interview, please take a little time to smash the like button and subscribe to the channel. We'd also love to have your feedback on our videos, so be sure to drop your comments in the comment section below. Thanks for watching and enjoy the video.
I think two things happened. Firstly, price got ahead of network activity. So what happened was there wasn't a lot of new transactions in the network, i.e. the value transacted wasn't going up, and the number of new wallets or active wallets wasn't going up. So price went up and the network didn't, and it didn't stick. And the issue was inflation. So why does inflation matter? Well, because the crypto is still a retail network, right? It's really driven by retail. And if you've raised prices on people and wages don't go up as much, they've got less discretionary income. That discretionary income was the dollar cost averaging that went into crypto. And so people stopped because they had to pay their grocery bills or their rent. So that's why it just stopped. So it shows how macroeconomics influences crypto markets in ways that people don't quite yet understand. But that was the big thing that happened end of last year and has continued to weigh on the market this year because network growth hasn't really improved. So we've seen rotations within the market. So we saw people switching from ETH to layer ones, and we saw NFTs hold their value, stuff as people are reallocating what they've got in the market, generally reallocating ETH. A lot of Bitcoin people, tend to stick with Bitcoin, but a lot of the ETH people reallocated to different parts of ETH, like, NFTs particularly got a lot of attention. The balance of probabilities is that we made the low last year. We retested the low this year, and I think the low is in. But who the hell really knows, right? So, I got the back end of last year wrong, like everybody else. I thought, we were going to get this run, and we didn't see it. I think we've thrown a war, 8.5% inflation, the Fed raising interest rates, all at crypto. We've thrown Chinese ban. We've thrown so much at it, and it didn't make a new low. Kind of usually that's a signal that the market kind of has found its bottom. And so now we're looking for, okay, what are the upside catalysts? The upside catalyst would be if economic growth starts slowing. We're likely to see then long duration assets, things that tend to outperform in low growth environments. And crypto tends to do very well in that kind of environment, much like Cathie Wood's ARK does, those kind of, longer term assets. So that's what we're looking for as the spark, I think, is a change in structure so people fear inflation less and start fearing growth more.
Hardly any crypto-related interview is complete without the question of 4-year cycles. Are they still on, or have we entered a new era for the decentralized ledger system? According to his reply to the question, Powell believes the 4-year cycles are over. His reason, much like what other experts have said, is that the market is different, the players are bigger, and they are rewriting the rules we use to play by. Here is Pal explaining the new market dynamics and how this could mean lower volatility for the world's cryptocurrencies.
Yeah, I think it's over because the market is much larger than it was and Bitcoin is not as dominant. So at the margin, the 4-year cycle will have an impact, but not as large an impact. For example, the ETH 2.0 thing is going to create a potential dynamic that's different. So I think the cycles have changed. And I think, over time, these very volatile trends get less volatile. And we saw that with Amazon in its early days. It was like up and down 95%, then 65%, and then it just gets less and less and less because more people are in the network. So it's the same with crypto now. There's 600 million people, 300 million people using it now. So what's happening is the volatility dampens. So, I think the new down 85% is the new down 50, is the down 50 where we are now. So it's kind of like we've had a bear market. We've been in a bear market for a year. Could it go down 65%? Possibly. But, it's unlikely to go down 85%. People have a very recency bias and they only know what they know. And people who've been in the Bitcoin market have only been around, a network adoption model for a decade. So they've only seen a few cycles. But if you go to Facebook, Amazon, Google, they've all had these for decades, and you can see how they work, and they tend to lower volatility over time.
Is the bottom indeed in for the cryptocurrency market? There are many signs that indicate so. For example, following news that U.S. inflation rose to a 40-year high of 8.5% on Tuesday, Bitcoin climbed back above $40,000, easing some of the losses earlier sustained as the coin hit a multi-week low of $39,300. As of press time, the coin has had a 3% gain in the past 24 hours to over $41,000. Ethereum has also made some recovery, currently sitting at $3,120, also around 3% gain over the past 24 hours. Terra and Avalanche are also going pretty strong at 4% increases in the last 24 hours. Both altcoins have become quite the pair to watch out for after the Luna Foundation bought some Avalanche to back its USD stablecoin. We may be seeing more massive gains for both soon. Still on the Luna Foundation guard, our latest favorite Bitcoin whale. The foundation has added another $100 million worth of Bitcoin to its stablecoin reserves. With the latest purchase of 2,508.94 Bitcoin, Terra now holds 42,406.92 Bitcoin in its wallet. This makes it the 18th largest Bitcoin wallet, with less than 500 Bitcoin needed to surpass Tesla's Bitcoin holdings. We have now come to the end of the video, and we covered some pretty interesting stuff here. So ensure you drop your thoughts, price predictions, market outlook, investment strategy, and any other related comments in the comments section below. Also, give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.